And yeah, I just wanted to go over a few trades and strategies that I had took the last few days, and even because it seems like we're in a bear market rally right now. Obviously, we're in a bear market, but we're rallying, so that would be considered a bear market rally. So obviously, when the market's bullish, it is easier to trade. And I did take a couple trades in the last few days here because I already went over the SPY with you guys. So this right here is a trading vehicle, a trading instrument. It's basically a index fund, but it consists of all the semiconductor plays. So we're talking about NVIDIA, AMD, or there's another semiconductor. I think it's TSM, Taiwanese Semiconductors. Uh, Basically, all the semiconductor uh, companies and stocks, Intel, AMD, NVIDIA, uh, stuff like that. You feel me? But what this is a index fund that has all of those in it, all the semiconductor plays in it, and it's also leveraged 3 times, which means it's gonna move 3 times as much as the regular stock would move. It's just leverage. So I took a trade on SOXL when I seen the market seeming like it had found a bottom. And if we go to the hourly chart, you can see it a little better. So if you see it, look, it was downtrending, downtrending. You see that trend? Looked like it found a top up here, ran into some resistance right here. Remember when I said I like my line stick like my hose? But yeah, so you've seen some top in action here. You've seen some top in action here. And again, look, this is an hourly chart, but it has a bunch of trading periods in it. So, look, each one of these, so like, look, 1, 2, 3, 4, 5, 6, 7, 8. Let's just look at the dates. So, from the 28th to the 8th. Yeah, from July 29th to September 8th. So that's how many trading periods that are encompassed on this hourly chart right here. And the reason I mention that is because remember how I said when you're getting your supports and resistances, the strongest ones and the best ones you want to get are off the daily chart. But on an hourly chart, that has this many trading periods, you can get some decent levels on here as well. But yeah, if you can see here, look, it's coming up, hit this resistance, tried to break above, struggled to stay above it. It became support for a little bit, then it broke back down. Bounced, looked like it found another level here. So about right there. So boom, resistance, resistance, reject. Hit the resistance, broke above the resistance. Grind it up, then hit this resistance. Reject it, grind it back up, broke above it, and tried to stay above it for a little bit, but then broke down, sold off, came back to this resistance, which then acted as support. Bounced back up to this resistance, rejected, came back down, tried to hold on this support right here. Well, actually, it bounced a little bit, tried to hold, then it broke down. Also notice that it broke down past the 120-day directional moving average. So at that point, you're in a downtrend. Okay, but then it found another level here to bounce off of. So right here, thick baby. Found another level here to bounce off of. Bounced off of it, bounced back up to the resistance, rejected, came back down to the support, then broke down, then sold off. On what day is this? The 9th. So I think that might actually have been the day that the SPY broke down. We had that nasty sell-off on the SPY, if you remember from the other video that I did when I was going over the SPY. So look, came back down, found this level. So more than likely, that was the same day, and this level probably coincides with that $400 support that the SPY had found. Anyways, boom, hit that level, bounced back up, broke through the resistance, broke through the next resistance, ran up. But then look, you see the wick on the top? That means people were watching this. And a lot of trading in the market is psychology. So, you know, you got everyone, retail and whoever else, the market makers, the big fish institutions, they're all watching the same levels. So they're seeing that it's running up, but it's getting close to this resistance up here. And then if you really want to get technical, this is a level right here too. Like I was saying, if you really want to get technical, this is a level right here too, because boom, when it rejected, it bounced off of here, boom, hit the resistance, rejected, bounced off of it again, then broke above, then broke back down. And then look, it was doing a little consolidating. It's a little consolidation zone right here. See all that consolidation right there? That's on that level. So basically, when this was running up, you know, everyone's watching it. Like whoever is watching this stock, the semiconductor stocks on this day, they see all the supports and resistances, the levels. So they know that this right here is going to be a possible resistance. So that's why when you see it bounce up there that day, there's a long wick up there, because people are selling, they're taking profits, or they're shorting it. Either they're selling to take profits, lock in profits, or people are shorting it because they know this is resistance and there is a high probability that it was going to reject and sell off. And so that's what it did. Then it came down here and bounced off this level. I mean, the levels are the levels. You know, they're not going to hit the level perfectly to the cent every time. You know, it may be a couple cents off, or, you know, 10, 20 cents off. But you see it came down to that level, then consolidated a little bit, then bounced up again, ran up that day. Look where it ran up to. Broke through this resistance, got up here to this higher resistance right here. Sold off, came back down, bounced off that level, through the resistance, bounced back up to the high again, rejected, sold off a little bit, went back up to the resistance, rejected again, bounced back up to the resistance, rejected again, sold off, and then bounced back up here to the high, sold off again. And usually when you see price action hit a resistance 1, 2, 3, 4, 3 times is enough. But if it rejects off of a level 3 or more times, more than likely once it bounces back up to that level again, it's going to reject. It's going to reject hard, because obviously if it rejected and failed the resistance so many times, it's a strong resistance. So by the 3rd, 4th or more times that it failed the breakout, it's going to have a hard sell-off. And that's exactly what happened here. And you could see, you know, it's market psychology. You know, people know this is resistance, so they're selling into the resistance, and that's why you see the wick up there.